Looking at the Nikkei 225 today, I think there's potential for an upswing over the near term, but beyond that, it's still a bit murky, and I'll explain why. Ahead of the open, it's trying to break above 70,000. There's quite a critical level there. You've also got on this time frame the 200 exponential and 200 simple bar moving average. What I'm hoping happens is we get a bit of a pullback after this potentially false start to the day within Friday's range. Reason being is that if you look at the daily futures chart, we've got a lovely uptrend here. It has been quite corrective and choppy, but the swings are getting less volatile. But more importantly, on Friday, we had this bullish candle, which confirmed to me a bullish piercing line. It's a 2-bar bullish reversal. Slightly higher volumes as well, below average, but still showing this some demand above 68,000. The lower wick of Friday respect to the 50% retracement mark. So I think there is demand above 68,000. And that's why I think that if we do get a bit of a messy start at today's open, 70,000 a big level, hope we'll get that pullback maybe towards 68.80 for a movement higher. Beyond that, I think the next obvious area of resistance is these highs around here. Now, where I'm a little bit suspicious of just to simply break into new highs without a fresh catalyst is when we look at correlations amongst other markets. Now, first and foremost, let's look at the stocks. These are the stocks that tend to have a big impact on the Nikkei. Yet when you look at the 10-day correlation, they've really broken down. Many of them are close to zero. A couple of them are below zero to show an inverse correlation. So when you've got these big names that aren't making the impact they used to, then what's really driving it is the smaller cap stock within that index. So it's not what it used to be. When the large cap stocks aren't in control, you can sometimes find that market's a little bit more choppy. And that's why I'm a little bit hesitant at this stage for it to simply break to new highs. Beyond that, though, if we actually look at what's going on, the bigger correlations. So this is the daily chart again. I've got the Nikkei against the purple line, which is the Nasdaq 100. Generally speaking, they do correlate quite well, but that correlation is weakening. The 60-day is curling lower. Strong overall, above 0.8, but not as strong as it was. The 20-day is now at 0.67, trending lower. So that's a weakish correlation, but not too weak, but getting there. The 10-day, however, is now negative. So over the past 2 weeks, the Nasdaq and the Nikkei have had an inverted correlation, which is not what you'd usually expect to see. So the Nasdaq is not having the big impact on the Nikkei it once did. As for the yen, this is the dollar-yen coupled with the Nikkei again. Generally speaking, it tends to move in the same direction, but a lot of traders don't really look at these longer time frames, they're looking at shorter moves, and that's where I think you can get sort of chopped up. When you look at the correlations on the 10 and 20-day, they're quite inconsistent and quite messy. So I don't think the dollar-yen is a good guide for Nikkei traders at the moment. Further out, I think there is hope for an eventual break to new highs when we look at what's going on in the internals. The lower chart here is the weekly chart of advanced and declining stocks. We can see that for the last 2 weeks, advancing stocks have increased and to an 18-week high, whereas declining stocks have decreased to an 18-week low. That's quite a healthy internal structure there for the Nikkei. We just need to get past this choppy phase first. So ultimately looking for a little bit of a pullback within yesterday's range. Maybe we'll get a move up towards those swing highs we're looking at before. I'm just hesitant we're going to simply scream to a record, sort of 40-year high again, unless we get a fresh bullish catalyst. As always, hope that's useful. Wish you best of luck with your trading.